Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing how to solve a problem under written down value method. We'll have depreciation problems under different method. Now that we have already learned how to solve a problem under depreciation in straight line method, we'll figure out how to solve the same under WDV method or written down value method. Let's figure it out. So as you know that depreciation is the reduction in value of asset. Now that we know this concept, there are different methods to regularize or to figure out how a depreciation has been calculated under different methods. The first one that we have already learned with the problem belonging to it is straight line method. Here we have a next problem related to WDV method or reducing balance method, or the other name for it is written down value method. Now, if you know that we have to mention the depreciation on the balance amount every year under this specific method. That means in year 1, if you have purchased any asset for 10 lakhs, 10% depreciation on it being 1 lakh. Now the balance that has been left rupees 9 lakh. The specifications for next year depreciation will always be related to 9 lakh and not on 10 lakh as per the straight line method. So when you have to figure out depreciation under written down value method, make sure you have only the balance being calculated for depreciations of next year. Hence, we'll note down a specific sum which will be mentioned here on this sheet. You can jot it down for your reference, and then we'll go ahead with the 3-step process. That means the first timeline, which will be in the chronological order. The second part would be the working notes, and the third part would be passing the journal entries for all these transactions. Let's figure out the sum, and then we'll go ahead with the working timelines and the specific journal entries. Let's figure it out. So if you can see, we have mentioned on the first sum, Mrs. ABC Limited has given the following details for the depreciation year 18-19. That means for the year 2018-19, April 2018 till March 2019, these details have been provided as follows. We'll go ahead with all of them under chronological order. 1st of April, asset 1 has been purchased for rupees 2 lakhs. 1st of September, asset 2 has been purchased for rupees 5 lakhs. December 1st, we have third asset being purchased for rupees 10 lakhs. All these details pertain to the year 18-19. Now, in the year 2020, that means March 2020, at the end of financial year 1920, we have certain details mentioned here. They have sold out the first asset which was purchased for rupees 2 lakhs has been sold out for 1,50,000. That means that specific asset has been sold out at the value of 1,50,000. We have to calculate the value of all the assets available with us by the end of the year March 2020. That means for year financial year 1920, we have to calculate the value of assets that we hold with us. And also, as there is a sale of asset here, we have to figure out whether we have a profit and loss situation mentioned in here or in this question or not. Depreciation is provided at the rate of 10% on WDV or reducing balance method. As you know, reducing balance method or WDV method includes calculation of depreciation not on the cost price but on the price or the value mentioned as the balance at the end of every year. Hence, make sure there is no mistake while calculating depreciation under this specific method. Let's go ahead with the timeline first, and then we'll start with the working. So now that we have all the details being mentioned here, the timeline states for 2 years. First financial year being 18-19 and the second financial year being 19-20. So for the first financial year 18-19, we have three transactions being mentioned. 1st of April, purchase of asset 1, 2 lakh rupees. September 1st, asset 2 being purchased rupees 5 lakh, and December 1st, asset 3 being purchased for rupees 10 lakhs. There is no sale transaction in the first financial year. However, there is a sale transaction in the second year. So at the end of first year, you will just mention the degrees or probably the depreciation for the first year of all three assets with the tenure considering. That means the 1st April transaction will have 12 months tenure of depreciation. For the September 1st transaction, you will have from September till March 2019 transaction depreciation, and for December transaction, from December till March transaction depreciation. That means asset will be depreciated as per the tenure they have been purchased for. This is for the first year. Now for second year, again you have depreciation entries, and now that we have specific transaction of sale being mentioned in the second financial year, we'll calculate profit and loss after we have depreciations being adjusted there further. Now after this, we have to show what is the value of all the assets that we have or that we hold as on March 2020. Let's figure it out with the working notes first for the financial year 18-19. So if you can figure out, we have made the working for the first financial year 18-19, whereby we have provided depreciation as per the written down value method. Now we have mentioned balance at the end of every financial year of all the three assets. First asset being procured for 1st of April, which is costing rupees 2 lakhs. Depreciation amount has been provided at the rate of 10%, hence the depreciation there will be 20,000. Now, at the end of year, financial year, that means 18-19, will have the balance of the first asset as 1,80,000. That means 2 lakhs minus 20,000 depreciation, the balance is 1,80,000, which has been mentioned here. Similarly, for asset 2, which was purchased on 1st of September, will have a different calculation. The cost price being 5 lakh rupees, depreciation at the rate of 10%. Now, the depreciation amount here will be only for 7 months. That means from September 1st until March 2019. That means September, October, November, December, January, Feb and March. 7 months being used for this specific asset. Depreciation is provided only for 7 months. The total of the depreciation amount calculated on 5 lakh rupees has been mentioned down here. 29,167 is the depreciation that has been calculated. You can calculate on your calculator itself. Now that the balance at the end of the financial year 18-19 will be as follows: 4,70,833. That means 5 lakh rupees minus the depreciation amount that has been mentioned here will give you a total of 4,70,833 rupees. This is the calculation for the second asset which was purchased on 1st of September. Now, the last asset that was procured for the year or probably financial year 18-19 was on 1st of December. Now from December until March, we have only 4 months of usage for this specific asset which was purchased for 10 lakh rupees. Depreciation again being 10%. Now the depreciation amount is only for 4 months. Hence, now the total depreciation that has been calculated here is 33,333 rupees, which will give you a balance of 9,66,667 rupees as the balance of the asset as of financial year 18-19. Make sure this is only for the financial year 18-19. We'll do another working for the financial year 19-20 just to figure out what is the balance of the asset as of end of that specific year. Now the closing balance that were mentioned here at the end of financial year will be the opening balance for the next year transactions. So if you can see, we have calculated the working for the next financial year, that means year 1920 as well. Balance as of the previous year, that means 1819, will be the opening balance for this specific year's depreciation calculation. So for asset 1, we had a balance, that means closing balance of 1,80,000 there, which will be the opening balance for the second year depreciation. Depreciation is provided at 10%, which will be again a reduction. So on 1,80,000, 10% depreciation will be calculated for 12 months because this asset has been used for 12 months and has been sold at the end of the year, that means end of the financial year, which will be another calculation of profit and loss in the next sheet. However, just for your reference, this asset has been used for complete 12 months. Hence, we have calculated the depreciation for 12 months itself, which is 18,000 rupees. So out of 1,80,000, you have to subtract 18,000, which is the depreciation amount for the second financial year, which will give you the balance of that specific asset at the end of March 2020. 1,62,000 is the value of that asset. So if the asset is sold for a price less than this, there is a loss. If the asset is sold at a price more than this, there is a profit. This is the simple calculation. Let's go on to asset number 2. The closing balance of previous year for this specific asset was 4,70,833 rupees, which will be the opening balance of this specific year itself. Depreciation is provided at the rate of 10%. Again, this specific asset has been calculated for 12 months because we haven't sold this asset. Hence, this specific asset has been used for 12 months here. The depreciation calculated on the amount 4,70,833 at the rate of 10% for 12 months gives you a depreciation for 47,083 rupees, which is into dot dot dot, probably that is the decimals, but we have rounded it off to the nearest digit. Hence, the total depreciation here is 47,083 rupees. Now, this depreciation will be subtracted from the opening balance, which will give you the closing balance for this asset as of 1920, that means March 2020. So 4,70,833 rupees minus 47,083 rupees will give you a balance of 4,23,750 rupees. This is the closing balance for asset number 2 at the end of March 2020. Now for asset 3, we have an opening balance which will be the closing balance of previous year. 9,66,667 rupees was the closing balance of previous year, which will be the opening balance for this specific asset in the year 1920. On this, we'll calculate 10% depreciation again for 12 months because this specific asset has been used for 12 months. Now again, the total amount will be into decimals of depreciation. Hence, we have rounded it off to the nearest digit. That means if 0.5 and above, you will round it off to the nearest digit. If 0.5 and below, you will round it off to the same digit itself. Just for example, here the depreciation is 96,666.66666. Hence, we have calculated it as 96,667. This is the amount of depreciation that we have calculated here. That is rounding off to the nearest digit. Now, this depreciation that has been calculated will be subtracted from the opening balance, which will give you a balance of 8,70,000. That means 9,66,667 minus 96,667 will give you an exact balance of 8,70,000, which is the closing balance under return down value method for asset number 3. Now, asset number 2 and asset number 3 stays as it is. We have to calculate the total of profit and loss here for asset number 1, as it has been sold out in the end of the year 1920. That means 31st March 2020. So now that we have calculated the profit and loss in this specific working, we'll figure out how it has been done. So the original cost of the asset number 1 was rupees 2 lakh. Out of which, for the first year depreciation, we have subtracted 10% depreciation, that is 20,000, and we got a return down value of rupees 1,80,000, which is for the year 1890. Now, for the year 1920, again, we have calculated depreciation on 1,80,000 itself, which brings you the depreciation value or the return down value of that specific asset to rupees 1,62,000. Now, in the year 1920, we have sold out this asset, which is for rupees 1,50,000. The sale price is 1,50,000, which is very clear that the market value of this asset is 1,62,000. However, you have sold it for 1,50,000, which brings out that there is a loss in this specific transaction. Now the loss is amounting to rupees 12,000 here, because the original price or probably the return down value was 1,60,000, or the market value as of 1920 was 1,62,000, and you have sold it out for 1,50,000. Clear evidence that there has been a loss of 12,000 here, which will be recorded in the transactions when we prepare it. Now that we have completed all the working here, that means the working for depreciation, working for calculation of profit and loss. Now we'll go ahead with the journal entries first. Let's prepare the format. So for the year 1819, we have the first journal entry, which refers to purchase of the asset number 1. Hence, the entry will be as of 1st of April, asset account debit to bank account 2 lakh rupees. Next, we'll record the asset transaction to purchase entry. So for September 1st, we have second asset being purchased, which refers to 5 lakh amount being thrown out for the bank account towards procurement of this asset. So the entry will be asset account to debit to bank account. Cost will be 5 lakh mentioned in the debit and credit column of the journal entries. We are not mentioning the narration which is supposed to be mentioned in this question. That means we'll have to mention narration below every entry stating what kind of entry it is. However, we have certain constraint of probably restrictions of space here, hence we are not mentioning it here, but in your questions or in your exams you have to mention the narration down there. Now on 1st of December, we procured the third asset, hence the entry will be asset account third debit to bank account 10 lakh rupees. Again, this will be a procurement of asset, hence bank account has been credited as it is reducing the balance of bank. Now, at the end of this specific year, there are no specific transactions apart from the depreciation. Hence, we'll go ahead and straight away provide the depreciation transaction, which will be 31st March. So if you can see, for the financial year 18-19 where the entries have been passed, we have figured out that the total depreciation is 82,500. 82,500 is the total depreciation for all the three assets, whereby all these three assets have been bifurcated down here with the terms of the depreciation. Asset 1, 20,000. Asset 2, 29,167 rupees on it. Asset 3, 33,333. This is the journal entry that we have passed on for the financial year 18-19. We'll further pass on the journal entries for the next year, which will mark the closure of this sum. Now, we'll prepare the journal entries for financial year 19-20. Now, for the year 1920, we do not have any transaction which refers to purchase. Hence, we'll straight away go ahead with the depreciation transaction and the sale transaction after that. So, we'll first provide with the depreciation transaction here. Now that we have already provided the depreciation for all these three assets, which amounts to 1,61,750 with the individual bifurcation of these assets. That means asset 1, 18,000, asset 2, 47,083 and asset 3, 96,667 being the total depreciation for all these three assets. Now we'll pass on the entry for sale of the asset. Now here we have figured out that the sale entry is as follows. Bank account debit, profit and loss account debit to asset 1 account. Hence, we have mentioned that the asset which was sold out has been credited here with the market value of that asset, which is 1,62,000, or the written down value of that asset. On the contrary, we have also mentioned bank account with 1,50,000, which is the actual sale price of the asset, and the loss incurred on the sale of that specific asset, which is 12,000. Hence, we have completed with this specific part where we have mentioned all the journal entries. Now, the last part of this specific topic refers to mentioning the balance of all the assets that we hold at the end of the financial year, March 2020. Now we'll figure out what is the balance of all the assets. With this specific journal entry, we close down all the journal entries here, and hence there is nothing down or nothing further to mention all these transactions or all these journal entries. However, there is one part where you can mention or additional entries that you can figure out. That means transfer of these depreciations to profit and loss account. Now, as you can see, for asset 1, we have calculated 2 lakh is the original cost price in the year 18-19, where we have calculated depreciation at the rate of 10%, 20,000, which gives you 1,80,000 as the balance as of year 18-19. Now, again, the depreciation for the next year is 18,000, which is for 19-20, which gives you a balance of 1,62,000 for the year 19-20, which and then sold out for 1,52,000, which gives you a balance of 12,000 as a loss. That means 1,62,000 is the value of that asset, 1,50,000 is the sale price of that same asset, which gives you a loss of 12,000 on this specific asset number 1. Now, at the end of March 2020, we don't have this asset with us, hence we won't be calculating the value of these assets any further. We'll further figure out what is the value of asset number 2 and asset number 3. For asset 2, we have figured out the balance. The original cost was 5 lakh on that asset, and the depreciation provided on this was 29,167, which is for the usage of 7 months tenure. Now further, the total balance at the end of 1819 was 4,70,833, on which the next year's 10% depreciation will be calculated as 47,083 rupees, which gives you the balance as mentioned below. 4,23,750 is the balance of asset number 2 at the end of year 1920, that means March 2020. We have the balance for asset 2 as 4,23,750, which is a written down value method. We'll now figure out what is the value of the asset for number 3 as of March 2020. Now for asset 3, we have calculated the balance where the opening balance was 10 lakh, which is the original cost of the asset, which was used for 4 months, which gives you a depreciation of 33,333 rupees. Now the balance for year 1819 is 9,66,667 rupees. Now this will be the opening balance for the year 1920. Going further, we'll have 10% depreciation on this, which will give you a balance of 8,70,000 at the end of the financial year 1920. Now that we have the total balance for the second asset as well as the third asset, we have figured out what is the balance of the assets that we procure or that we hold at the end of the year 2020, which is as mentioned below. 12,93,750 is the value of all the assets. That means the market price of all the assets that we hold for our company or for Messrs. ABC Limited. With this sum, we give you the closure of written down value method or calculating the depreciation under written down value method. We have figured out also how to calculate the profit and loss under written down value method. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.